Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Siemens, which has been a strong performer over the last year or so. So let's understand about the business and let's understand what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Siemens, here's a small request to kindly support me on Patreon, and once you do that, it will help me grow the channel. It will also help you ask me questions on a daily basis. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I keep putting up from time to time. And also, if you can pay $100 upfront, then you get 1 year access by paying for 10 months, so it's a 20% discount. For a detailed market or company talk or one-on-one discussion you want to have, you can directly email me and we can work things out with a fee. Now about the company. Established in 1847 in Berlin, Siemens provides electric motors, generators, transformers and electricity distribution and control apparatus all across the world. It is one of the renowned capital goods companies, one of the renowned heavy engineering company of the globe, and is one of the largest companies in this space. A strong management and market leader and serving leading clients all across India and globally. The market cap of the company is now around 79,000 crores, and it has more than doubled, or you can say even tripled over the last 4 or 5 years. I remember the stock being around 600, 650 to be now around 2200. So it has tripled over the last 5 6 years and has done exceedingly well from a market cap of around 27,000 crores. If you look at the financials, and these are Q1 numbers, so June quarter numbers this year versus last year, we had a sales growth of around 140%, nearly 137% or so, and a profit of 138 crores versus a loss of 2 crores. So it has come back into profitability and big time, and that is the reason why the stock has been surging, because the numbers have been improving over time. Debt has reduced significantly and there's high institutional and promoter holding in the stock. Yes, there is a high public shareholding as well, but a decent promoter and institutional holding is in this company. The ROE of the company is around 8%. Operating profit margin is also around 8%, which in my opinion is set to improve going forward as things improve on the ground. If you look at the performance, it has been subdued for many quarters. So, as I mentioned before, the up move that began post the pandemic in 2020, there's a huge up move that has taken place. And before that, before 2020, the stock had done virtually nothing, around 800, 900 from around 600. It did around 40%, 45% over 4 5 years. So really did not give huge returns to investors, and it was in the fag end of 2017 and 18 that it managed to somehow salvage some pride by going up to 850, 900. Otherwise it was in negative territory over a 6 7 year period prior to that. So it has done exceedingly well over the last 2 years or so, 1.5 2 years. Has fallen in had fallen in February March 2020 by more than 60%, but then the recovery began and numbers have improved significantly. So future prospects look good post 2022. So I believe from FY23 onwards, I think things are going to improve even further. As I mentioned, that through the vaccination that is taking place, so we might be out of the woods if there is no new variants coming up by middle of next year. So hopefully FY23 could be pretty good for the company and for all the sectors which have been battered and bruised because of the pandemic. It's going to be a big time recovery from 2022 or so. So numbers will only become better from here and things are looking upwards at the moment. If you look at technicals of the stock, then 1750 looks a massive long-term support. It is around 22-2300. So any 20%, 15-20% decline to those levels would be a buying opportunity. And a short-term support lies just 10% below around 2000. I think 1950, 2000 levels are very interesting to buy for a short term trade with a stop loss of 1750, looking very strong on charts. May see consolidation. It has gone up significantly, so it could consolidate for say 6-8 weeks, but then another up move is possible. I think we are looking at 2600 over the next 1 year on the stock, so it is a buy on any declines. So if you have, then hold. Of course, if you have it from lower level 600, 700,000 levels, very good for you. Hold on to the stock for the next 3 years, 2 3 years. It could double in the next 4 years or so. So could give you very consistent returns of around 18-20% easily year on year if things really get better on the ground. Keep track of numbers, and if it looks like that the growth is stalling, then you can exit the stock probably. So this was my video on Siemens. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.